All right. What's up, tycoons? What's up, traders? Super excited for today's video. We're going to take a look at ULTA and break things down on the daily time frame. Okay, ULTA had a massive crash after earnings, and it's really been in a bearish trend here as of recently. We're going to go over the key levels it needs to get above for it to go bullish and potentially fill that really huge gap. All right, and we'll also go over the areas where we could drop down to and where demand has been present in the past to see if we can reach those levels. We also have our Fibonacci fan levels on here as well, giving us some nice key trend lines of support and resistance to pay attention to as well. We're also going to break down the RSI and take a look at there. We are oversold here currently at the moment. We'll see if we can form some bullish divergence in the future. All right. We're also going to use today's sponsor, Simply Wall Street, to go ahead and dive into some of the fundamentals of ULTA. So that way you guys can get a nice technical breakdown as well as a fundamental breakdown. Simply Wall Street is a great platform that gives you guys fundamental analysis if you're not an expert or professional. It makes it very simple and easy to understand for you, as well as giving you guys some nice colorful charts and graphs to help really visualize what it is that you're looking at. There's going to be a link in the description below or a pinned comment. You guys can use that link to get yourself a 14-day free trial, and you can also get up to 40% off for the first 100 people that join. All right. We'll talk more on them later and really dive into the fundamentals, the financial health, different things like that. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Trading in stocks, bonds, commodities, and crypto involve a significant risk of loss and is not suitable for all investors. So be sure to read through the full disclaimer. Now, all right, when you take a look at the beginning, all right, and you look at the risk to reward standpoints from ULTA, all right, some of the rewards is that it is trading at 6.9% below the estimates of its fair value. Earnings are forecast to grow 3.42% per year, and earnings grew by 15.9% over the past year. And analysts are in good agreement that the stock price will raise by 26.5%. Now, from a risk analysis standpoint, it's got a high level of non-cash earnings, and there's been significant insider selling over the past 3 months. Now, what you guys have to realize and what a lot of people misinterpret about insider selling is this is how people pay themselves, guys. All right. Let's go ahead and take a look back at the chart real quick. And ULTA just was making all-time highs, guys. And so, executives and people inside of the company, they're going to pay themselves essentially by selling shares of their stock, right? That's really where a lot of their compensation is, in the stock-based compensation. And, they've been holding for a very long time. The stock's hitting all-time highs. It was ranging around all-time highs over the past 3 months. So it makes sense to see insider selling, right? That's how they're paying themselves. So it's not like always like there's going to be some huge forecast of a huge move. Now, obviously, it is a big coincidence or conspiracy that there was lots of insider selling and then we see this huge gap down. But a lot of times people misinterpret that as like, oh, the insiders know that there's going to be a huge crash every single time. All right. You have to remember, if you've been working for the company for a long time and, the stock is making all-time highs, it makes sense that people would pay themselves, all right, through the stock and, sell some near those all-time high price levels. Okay. Now let's go ahead and dive into the fundamentals a little bit more. We'll take a look at the, future ROE is forecast to be 48.9%. That's the future return on equity. All right. So that looks really well, and it's much higher than the industry standard of 18.7%. So that looks good. Now, ULTA has underperformed the U.S. specialty retail industry, which returned 2.7% over the past year. Meanwhile, ULTA is down after that really big move after earnings, and ULTA has underperformed the U.S. market, which returned 2.1% over the past year. Now, ULTA is not significantly more volatile than the rest of U.S. stocks over the past 3 months, typically moving up or down 5% a week, and its weekly volatility has been stable over the past year. You can see that it is below the average market and the industry average volatility. Now, it may be hard to tell that due to the recent volatility, but on a longer term scale basis, it's not as much of a volatile stock compared to others. Now, the price to earnings ratio versus its peers, it's at 16.4x, and it is a good value there compared to the peer average of 21.3x. All right. And if you look at the price to earnings ratio versus the industry, all right, the industry average is at 9.9. Meanwhile, ULTA is right there at that 16.4x. So compared to its peers, it's not as much. It looks like it could be a better value, but when you look at the industry as a whole, its PE ratio is higher than the industry average. Now, analyst forecasts, all right, over the next 12 months do have pretty good confidence, right? The average 1-year price target is going to be about 26.5% above where the stock is currently at. So from that standpoint and from an analyst standpoint, things do look like there is upside room potential for ULTA, right? Oftentimes you can see it has these big crashes and then it gets these nice moves up, right? Big crash here and then a nice move up, big crash here, nice move up. And now we see another really big crash. Okay. And again, this is all within the Simply Wall Street platform. They have a website. They have a really nice app as well. The app is super awesome. For looking up stocks on the go. You're going to get all the same features that you do on the desktop web version. Now, some of the key information on its financial health is it's got a 0% debt to equity ratio and no debt. So from that standpoint, it gets a 6 out of 6 on the financial health. As a total shareholder equity of $2 billion and a total debt of $0, its total assets and total liabilities are $5.4 and $3.4 billion respectively. ULTA's EBIT is $1.6 billion, making its interest coverage ratio negative 129.5. It has cash and short-term investments of $636.4 million. All right. Now, remember, you guys can get a 14-day free trial and up to 40% off for the first 100 people to join Simply Wall Street using the link down below in the pinned comment or the description. Now, this is our daily chart structure that we have here. Okay. Remember, we talked about this really huge gap. Okay. If you're not familiar with what a gap is, take a look at these two candles, right? The very bottom of this candle and then the very next candle, the very top. And all of this space in between here is what's known as a gap, right? All of this area on the chart. Now, typically, gaps tend to fill about 90% of the time, guys. That's 90%. The big question, all right, though, is when is it going to fill? Is this gap going to fill sometime soon? Or is it going to take weeks, months, potentially even years for the gap to fill for ULTA to see another bullish cycle and fill that gap? Now, ULTA's trading in the low 400s right now, and the gap is all the way up here to about $480. So there is potential for arbitrage there, but the key thing is, is this going to continue heading lower before it ends up filling that gap? Now, there's some key levels right here. We have the 61.8, the 50%, and the 38.2% retracement levels. These are your three most common and well-respected Fibonacci retracement levels. And so, to potentially break through and get a reversal on this gap, we need to break above these levels, right? If we can get above 425.25, that's when we have the potential to go bullish if we flip that to support and get the breakout and potential gap fill. Now, everything underneath there is going to be bearish, right? And indicate that we could potentially head lower and continue this downtrend. That's how you use the fibs to identify trend continuation, because nothing moves in a straight line down or a straight line up. You get a move up, retracement, continuation higher, or you get a move down, retracement, continuation lower. And so looking from the gap, all right, from the top of the bottom of the gap, from that swing high to this swing low, you see we had the move down. We retraced up to the 61.8% retracement level, but we haven't been able to break out above it. So below there, we have the possibilities of continuing the downtrend, right? Now, you can also use the fibs to spot reversals. If you move up, retrace, and you start to consolidate and break through those retracement levels, that's how you can spot a potential downside reversal. And if you move down, retrace, consolidate, and break through those retracement levels, that's how you can spot a potential upside reversal. So that's why we're bullish above this 425.25 level in particular, because if we can retrace and get above there, that's when we have a chance of getting a short-term reversal and potentially retesting the highs here. If not, breaking out past those highs and trying to fill the gaps up. Now, we also have the Fibonacci fans on here giving us some key important trend lines, and you can see, all right, when we connect our low here up to our high, that we actually did come down and bounce off of the bottom Fibonacci fan trend line. So this will be a really key area of support potentially as well, right? Even if we do continue the downtrend, we'll look to see if we can bounce off of this trend line and continue holding this as support. If we break through there, there's a very strong chance we're going to head down to the $380 price area on ULTA, as that is where we have established some prior demand in the past. Now, the RSI is oversold here. Okay, it dipped down extremely, way oversold, and it started to recover, but it's still below 30, which is that technical definition of oversold. So Typically you don't want to buy something when it's overbought and you don't want to short something when it's oversold. So even though this thing is in a massive downtrend, I would be cautious trying to short it right now. It may look very tempting, but there is an increased likelihood that a stock is going to bounce when it is at these oversold conditions. Now, does that mean that ULTA has to bounce out of these oversold conditions and the stock has to go higher? No, that's not the case. Okay. A stock can definitely sell off more just because it's oversold, and a stock can definitely go higher even though it's overbought, right? These are just some general rule of thumbs that you want to take into consideration. Now, hopefully you guys enjoyed this video, this technical analysis, and this brief dive into some of the fundamentals. If you guys did, smash that like button and subscribe to the channel. Let me know you guys' thoughts on ULTA. Do you think that this is a good value right now? Are you interested in any trades, whether it's short term or long term? Let me know your thoughts down below. And if you enjoyed this video, I did just drop a top trade ideas video that ULTA was included in, highlighting around 10 different stock tickers that have some different potential setups and what those setups are. And maybe you guys would enjoy that video as well if you enjoyed this one. So be sure to click on that one right here.